Hello, everyone. Welcome to EPSMomentum.com. I just want to go over a few tools with you to help you pick stocks. In the middle of this earnings season, you need to have the best tools to find the best stocks out there. Listen up, EPSMomentum.com. If you want to know about us, just go to our webpage, EPSMomentum.com. We're running at 20% off with a coupon. You can see it at the bottom of your screen, and you can start with that. What are we talking about here? So, firstly, you have a bunch of tools here on the top, about 14 of them that you can use and pull up very quickly to have a look at what the stock is about or the various characteristics. And yeah, so this is very useful. You can go over every single of them and see if you can find good stocks. But I want to simplify it for you. What we did at EPS Momentum is we set up an entire model to help you pick the best stocks out there. So what is this model? So this model is the earning momentum model. And you can see that EM number on the chart. So whenever you have a chart, you can see that EM 29, 23, 28, 14. You can see that EM number. And what we did, so you could play those little videos here, show you, or illustrate it with one picture. We took the product life cycle of a company where usually it introduces a product, growth, mature, and decline. We took it to the next level where we took both earning per share and sales and ranked both earning per share breakout and momentum with that with an EM score, which could be between plus 50 and minus 50. What does that do? Well, everything below zero is stocks that you can ignore. Between 0 and 20 is one of those metrics, either EPS or sales or in breakout. Anything above 20 is absolutely amazing. And you will see flags like green flags, positive green yes flag. That will tell you this is a good stock. Not that you have to buy it now, but this is a good stock. Or it's a no if it's below zero, right? But above 20, you get a nice yes, and it's pretty clear for you. So let's start with this. The signal box is here. You can see it's a green light. If I change the stock to Meta, for example, I'm gonna have a red light. Why? Because the EM score is 10, not 20. It was 30 the quarter before, but today it's 10. And then there's the timing part. So the timing momentum is really those three sub chart that you have here on the chart that are either positive or negative. So what are they? Timing momentum is really the momentum of the stock price using moving averages, distance to high, ratio to the S&P, a bunch of items in there that makes it really easy to understand. So if it's below zero, as you can see, it's way below zero here. Stocks have been declining, keeping you out of the stock completely. And then it starts being positive, and then very positive, and then extremely positive, and the stock is obviously rallying. Then we have the timing bias, which is really a 3-day window of the green. So as the green shoots up, the yellow as well, and then it plateaus, yellow collapses, then go below zero. So keeping you out of the stock when necessary. And the market score is the ratio of the S&P to the stock. So the stock to the S&P, sorry. So again, below zero, you're underperforming. Above zero, you're overperforming the market, the entire market. So this is really useful for you. So yeah, look it up, see if you find it useful. I think you would nicely surprised. It's very powerful. You can quickly filter. There's a button here called Best Stocks, and that basically gives you best stocks you can find. So that is really important. Click on Best Stocks. There, I'm gonna click on it. It's gonna go to the screener and pick the best stocks that are out there. So let's do that again. Just refreshing the screen a little bit here. Click on best stocks, and here you go. Okay, and here we have the best stocks: so Wisdom Tree, Curve Mining. So we can look at Wisdom Tree. So this one should be green and green, but it's just this item here is negative, just turned negative here. So that's why you have a little red here. But otherwise no, you can have it green as well. So that's easy. All right, so easy to find stocks very quickly. What else can we do? Well, so first off, you can look at each stock and look at the growth of the stock. So here, 80% growth for Wisdom Tree. went from 0.1 to 0.18. That's 80% growth. And also the acceleration, which is truly rare and unique. The acceleration gives you whether the growth is accelerating or not. So that's very important. We can search for all these fields. I'll show you in a second. But we can look at sales or earning per share. So sales, same thing, accelerating as well, and earning per share growing. So again, you can see the shape of the curve of these stocks. They're really the best shape you can find, which is plateauing, growing, and so on, building a base and growing. And that's what we're always looking for. So you can go in the screener, earning matrix, and cherry pick all the variables here. So I can do earning per share from one year to another, or sales from one year to another on a quarterly basis. I can have them greater than 10%, here greater than 10% as well. So I can filter that. I can do distance to high, let's say 15%. Market cap, I can change my market cap. I can change my MS, TM, and so on. Be less stringent here if I want. I get 51 stocks. I can click on Garmin and I get an EM31, very powerful. And you can see that it has not always been like that. It's minus 13, minus 14, 13, minus 3, minus 1, 29, minus 2, and then 31. So see, it's been improving. Momentum's been improving, except that point here. But that's important to see. Going further, not only you can select the growth, but you can also filter for acceleration. So I want all the stocks that accelerate in a significant way. So acceleration year on year. No, that's not what I want. Oh, sorry. Acceleration quarter on quarter. Right. So this is acceleration for the current quarter. I want it to be positive as well. So I don't want stock that decelerate in both earning per share and sales. And I can even say in several quarters in a row. So I can say sequential positive earning per share acceleration and sequential positive sales acceleration. And I can do that for the past 2 quarters and 2 quarters. So these 5 stocks have been growing for the past 2 quarters. I can be less stringent here. So we have a little bit more. 25 stocks have been growing for the past 2 quarters at least, and making highs. So let's have a look. OLI, and you can see they've been growing for the past 2 quarters. Look at that. Really, truly amazing chart of growth here. KKR, same thing. A negative EM here, but it tells you where are the best guys out there very quickly. So this one has been accelerating for 6 quarters in a row. That's truly amazing. Okay. So yeah, I mean, this is a good way to find good stocks very quickly. Now let's take it up a notch more and go into the revisions. So the revisions are really Wall Street revisions, earning per share revisions. If I go back to Meta again, I can see my revision score here. So yeah, revision score is there. You can track it very quickly. It's much more convenient than having a set of numbers like this. So here you have one clean line that you can also put on the chart, revision line here, and you have the revision earning per share, and you can see it's been growing the stock as well. So it's really useful to have them both here. Now the important thing is the growth from the beginning of the quarter. So quarter has been on the 30th of October. What I'm going to do, I'm going to reset that screener completely, maybe create a default screener, and go into my revision section. And the revision section, what I want is the revision change since the beginning of the quarter. We want the revision change since the beginning of the quarter, and the price change since the beginning of the quarter. I mean, the main difference on EPS Momentum is that we think things in quarters, not in periods, not in weekly or monthly or yearly. We do things in quarters, earning quarters. So that's a main difference between any other platform out there. So sequential revision change, change in dollar value, and change in 3 months. And this is what we have. So sequential revision change in percent. So this is the change in revision, earning per share revision by Wall Street since the beginning of the quarter. And that's what you want to monitor, because you want to know if since the last earning day, they've been revising up their estimates or not. That's the most important thing. Same with the price. So the price change, which is a field that you can find here, price change from the quarter, beginning of the quarter. So I want only the stocks that went up since the beginning of the quarter and that were positively revised up by Wall Street. All right. So that's that. And then maybe I want a nice trend in earnings, maybe a positive nice trend in earnings. So now I have 32 stocks. I guess again I can have a look at ServiceNow. Look at the earnings; they're all up, both earning per share and sales. You have a nice growth here. We can see it's 11.56% up, so that's pretty impressive. And then yeah, we get good names here. So obviously we can look for distance to high here, but there's other things that you can do to be even more powerful. Is you can look at the price statistic. So here you can have the price, the slope of the price 5 day, the slope of the price 10 days, or the distance to high in ranking method instead of sigma. But it can also have the ratio of the stock to S&P. So I can have the ratio over 250 days or the percentile ranking. So it's really statistic. All of these things are very useful. So one of them is called the ratio of the S&P change since the beginning of the quarter, since the earning date. And this is very useful because you can, so remember that blue line is the stock versus the S&P. So you want stocks that has outperformed the S&P since the beginning of the quarter, okay? Which this guy looks like. So we select that field and then we say that this outperformance should be about positive percent. Let's sort it out. 74%. So what are we getting? We're getting AppLovin. AppLovin has been skyrocketing, literally. Went from $150 to $300. 100% in 10 days. And yeah, you can see the market score is super high up. Truly abnormal. Same thing with Palantir. So look at this. Boom. Look at this. EM29. Very good. Celestica. EM20. Notice that I haven't even, actually, I have filtered on EM, but I can remove that filtering. And now I have 332 stocks, but still have very good candidates. So Reddit, for example. Reddit is a 1. So when you have a little star, it means that the stock is fairly recent, like IPO recently. So we don't have full history to compute the EM. Otherwise, I mean, the price looks by itself, right? Really impressive. Kifu Technologies, let's see. All right, so this guy has outperformed in a nice way. 154% revision. Pretty impressive. Let's look at more. GDS Holding. GDS Holding. Great. I mean, that's despite that EM14, revisions are up a lot. Let's have a look at why it is 14. Okay, so let's have a look. Yeah, so here's why. The earning per share is flat for the year, so no growth. And the sales is 14% up, so growth and acceleration. So there's an acceleration in sales, but not in earning per share. And that makes it not an ideal candidate. Okay, so we can carry on with this and dig deeper. Have a look at the dollar flow. So we want to know if there are people buying, if there's like dollar pressure in the name. So I want to see if the dollar flow has been upsloping. So there's more dollar being sent to this stock, or basically people buying the stock. So it's really the volume, abnormal volume on it. So let's have a look if there's positive dollar flow. Disney, right? So high up and a jump. The dollar flow will be into the data here, and then you have dollar flow. That's what you get. You get huge spike here in dollar flow. So a lot of interest, a lot of volume, people jumping into the stock. OPKO Health. All right, this is interesting. 1.65 small cap stocks though. Lots of volume. You can look at dollar flow. Yeah, dollar flow up. So that's good. What else we got? Zillow, Wix, and so on. Wix. Let's have a look. Okay. It's definitely outperforming a little bit. We can look at the dollar flow, huge dollar flow as well. So that's good. Okay, what else? I hope you find this useful. We can carry on with more and have a look at the drift. So the drift is a completely different thing. We are really looking at, let's go back to Meta, for example, like a stock. really looking at companies' earning quarter statistically all the time. And then we average them, compute the average of that company over time and the possible cone of price projection of where the stock price is going. So sometimes it's very wide, sometimes it's more narrow. We can have a look at, I don't know, maybe Google, right? So this is fairly narrow. This is just $50 wide. You can see we're 66% accurate in this. This is drift B, it's circled in green here. And this is the price projection for Google over the next 90 days. Now, you'll ask, is it true? Does it work? Well, 66% of the time, 10 quarters over 27, it has fallen inside that range. And we can have a look at it in history. So wherever it says N here, that means, and you can see the chart on the top, that means it actually fell inside that range. Out here, and it was out by just a day. So really borderline out, I would say. Yeah, you can see the drift. You can see the forecast and the actual forecast and actual forecast and actual. Yeah, I mean, so the drift is very useful if you want to have the underlying trade options or do other things. You can also filter here and come up with distance between the end of the drift, so the middle point of the drift, and the current stock price. So CAE here is minus 11, meaning the stock has to drop 11% to go back to $19, right? So this is where we are. So maybe what you want is you want positive distance to drift, right? So for example, Technoglass has to go up 24% from here to here in order to get to the mean of the drift. Or pick another one, Fortinet, 10%. So Fortinet has still 10% upside just to get to the mean, right? It can go to 125, so that's much more if you want the upper band, max band. So that is really useful. And again, so this is give me all the best stocks that EM filter. Give me all the TM, the stocks that are really high up and positive. Give me the one that have Wall Street revise their estimate significantly since the beginning of the quarter. Give me the one that beat the S&P and also that have dollar flow in and still have upside on the drift. So I got Wix here, which was, well, it's almost at the end of this drift, so it has a little bit of upside, but it's one of the candidate. I can have a CyberArk. All right, so this is significant. We got an EM29. We have positive revisions right there, and very positive since the beginning of the quarter. We have a drift with upside. So this is 303, it should go to 329 and 436. That drift is 100% accurate. It usually goes up 10%. So there's definitely a 10% rally here, not priced in, but that should go to 330. So that's that. And get earning revision. That's a screaming buy, actually. That could be something interesting for you guys. Anyway, I hope you found it interesting and that you can use it for your earning or stock picking or research. And let us know if you have any questions. You can find us at EPSmomentum.com. The 20% off with the coupon code BFDY24. Looking forward to see you guys there. We'll chat again. Thank you very much.